What's up, traders? Here, welcome back to another episode on the podcast, another trader interview this week. I really hope you will like this one. Today, I'm sitting down with Jeffrey Wang, and Jeffrey is the head of Americas for the Ember Group, specializing in cryptos and Forex trading. He began his career in 2001, trading for HSBC as an exotic FX option trader, and has since then evolved and achieved a lot of big goals and learned different instruments and markets. I thought his view on cryptos was really interesting for someone like me trying to learn at this point and trying to get into cryptos more and more. So without further ado, let's dive right into the interview with Jeffrey Wang. So, Jeffrey, for people who don't know who you are, tell people a bit about yourself and what you do exactly.
Hi, thank you for having me on. So my name is Jeffrey Wang. I'm currently the head of Americas for Amber Group. And Amber Group is basically kind of, I like to think of it as like an investment bank for crypto finance. And, previously I used to run FX derivatives and G10 spot trading at Morgan Stanley in Asia. And before that, I've traded kind of FX options specifically for, over a 15-year career before I got into crypto.
So I'll be honest with you, I've been trading Forex for about now like 7 years or so, well, 8 years now.
Yeah.
But crypto is something that I just started like a week or so ago, like just recently. So I'm really new to it. So I'm curious to hear like a bit about how you deal with that more compared to other instruments, of course. So first I want to hear though about how did you come to trading in the first place? What made you want to go to trading and how did that happen exactly?
Yeah, I mean, I think I always wanted to work in finance and kind of, when I was in college, you always had the idea of, being like on a trading floor or something like that. And kind of, as a student, it was always in my head. And basically I joined a bank as a graduate and they had different rotations. So you basically get time on different kind of desks who do different kind of businesses. And ultimately, I always thought I wanted trading, but kind of working on different desks really confirmed that because, I did 1 6-month stint in capital markets. And essentially what you're doing there is putting pitch books together. So like you're just working on PowerPoints all day, changing slides, putting in kind of regurgitating the same things over and over again. You're doing like find and replace where you change the name and then change. And, after 6 months of that, I found out I was really terrible at it. Even stuff that seemed pretty basic, like just I'd have pitch books with, like one company name in the wrong place. And it would be like company Y and company X. And, I thought I was being diligent on it. And ultimately, like, it just wasn't for me. And I had a rotation on the trading desk. And it was kind of, night and day. I think what I always liked about trading was being able to start kind of fresh every day. So, you come in every day is a new day. I had a clean sheet of paper in front of me. Whatever happened yesterday was kind of yesterday in that sense. So I really like that idea of, kind of having a new challenge every day and kind of being able to start fresh every day. So, I mean, and for all the traders, you're a trader, most people, I guess, listening will be traders. They all kind of understand that, I guess the excitement, the risk management, I mean, everything about it is, just very dynamic and exciting.
Was trading something that you were good at from the start or something that you had to learn and kind of fail a little bit in to be able to get better at?
Oh, no, I mean, I think, especially starting on a FX derivatives desk, the learning curve was like super steep. I made a lot of mistakes. I kind of lived and breathed it for a long time because it's just, you're just thinking about it so much. I mean, I remember dreaming about it at night, my first couple of years working on the trading desk. It was just kind of all encompassing. And, I think most traders would admit that I think to become a good trader, you need to make a lot of mistakes, right? I guess if you start at the right time, you can catch, I guess, markets that are easier to trade and people feel that they're very good at trading when they may not actually be. But I mean, I think, yeah, you need to make a lot of mistakes. I made a lot of mistakes. So we used to quote prices for, counterparties, hedge funds, be it. I mean, I've made so many mistakes pricing stuff off kind of stale markets, not understanding depth. So, you can see a price on a small amount and someone asks you in 50 times that amount and you still quote the same price and you realize, behind that depth, the market is very different, so many mistakes kind of along the way. But luckily, I had a lot of people teaching me, very patient kind of managers. So yeah, I think, it's part of becoming a trader is really, making mistakes. And, even the young guys I train now, the main thing I tell them, because, undoubtedly everyone makes mistakes still. It's okay to make mistakes, but, the main thing is you have to learn from it and you don't let kind of same things happen again. So
that's interesting for sure. So when you were trading for a firm like this, I imagine they give you an account that you have to manage and trade. What happened from there? Was it easy for you to the first year to kind of get some returns on it, or did it take time for you to be able to adjust and kind of trade properly on that account?
Yeah, I mean, I think the benefit of being kind of sitting on a bank trading desk, I guess more specifically being on a market making desk where, your primary responsibility is quoting clients of the firm while also risk managing and obviously trying to make money out of that book. So instead of just kind of having your own view, you have to kind of balance that with the flows that you're getting. And often, in FX, a lot of people can have the same view at the same time. So you might have a view that, dollar yen is going higher, for example, but the whole market has that view. So every customer that's coming in is asking you for topside dollar yen, and they're buying these options from you. And it's kind of the exact view that you have. And now, instead of having the view you want, you actually have the opposite trading book, the opposite in your trading book. So I think to be successful, at a market making kind of desk, especially for options, a lot of balance and a lot of risk management involved. So, you might get paid out of these topside options, meaning, if dollar yen rallies as you might expect, you probably actually lose money. So you have to figure ways out to kind of balance that. And sometimes you can't just buy back the options that you're paid for because maybe the price has gone a lot higher. So you might have to look at like a proxy. So, if dollar yen goes higher, what else is going to happen? And then you put that trade on, or you might just have to have, more of the underlying as a hedge. So a lot of it is, coming from, my market maker options hat on, it's all about kind of risk management and thinking, if, like, everyone has a view dollar yen is going higher. So if that happens, what else happens? What's going to happen to the implied volatility of dollar yen? What's going to happen to the volatility smile in that currency? How can you take advantage of that? Are short dated options going to behave the same as mid dated or long dated options? Is euro yen going to move the same? Can you make any money out of euro? Is this a dollar yen specific kind of move? So it's a lot of kind of balance involved, because a lot of times, I mean, most times I'd say on a market making options desk, you don't have the position that you want because, you are quoting clients and they're putting trades on against you in that sense. So you're basically figuring out creative ways to try to hedge or risk manage.
When you work in that kind of job, how much room is there for mistakes? Like, could you make a mistake and still the company will still be okay with it and you can recover? Or what is some mistake you can or cannot make as a trader?
I like to think that, most trading desks and, most people are reasonable in the sense that, like I said, everyone makes mistakes. Mistakes are made a lot. So, if you make, and mistakes that you make can obviously be quite costly very quickly. And I don't think it was always really the monetary value of the mistake that was determined, like, oh, you really screwed this up. Your job is at risk. I think it was more what led to that mistake. Like, what decisions did you make? Like, was it the right choice at that time and just all of a sudden the market went against you? Or did you just do something that was completely wrong and that you've taught not to do? But in general, I think I had very kind of understanding, managers. And the mistakes I made, might have cost me, but they were never on a level that you think this guy has no idea what he's doing, or he's purposely doing things a certain way. So I think the kind of mistakes that were really frowned upon is I don't even know if these call these mistakes, but if you're not being honest, I think the best thing to do is, if you make a mistake, immediately as soon as you realize, you tell, the desk manager or, whoever is above you, and you guys work to figure out how to fix it or how to mitigate it. But if people made mistakes, and they could have been very small, but if you hide them, ultimately, like, that's obviously more about, trust and integrity of that person. Or you are, trying to, anytime you try to deceive someone, and, like, especially on the trading floor, a large corporation, it's not looked well upon. But, like, mistakes that might cost money might not be so bad in that sense of, your job might not be a risk, even though you make that mistake. But as long as you learn from it, right? So if you keep on making the same mistake over and over, obviously, that's also going to be.
What made you decide to move on and do something different? Because I guess as a trader, it's kind of easy to, especially if you like it, to kind of stay doing the same thing forever. But what made you want to kind of change and do something different?
By the time I left the FX market, it had changed quite a lot in the sense that obviously, you're in the FX markets every day now still, margins. I mean, the prices that you get, I'm sure that you trade on are like super tight. You can do your size and there's almost no slippage. And ultimately, I guess what kind of caused all this is, a lot of liquidity aggregators, a lot of algorithms, a lot of machines that are kind of quoting this. And ultimately that meant, less and less human traders, less margin for the trading desk, all that kind of stuff. And, this is probably a good segue into, crypto. And as you mentioned, you're just dipping your toe into crypto. Crypto's at a stage now where maybe FX and equities were, 25 years ago. So there's a lot more room for growth as an industry around it, especially as a trading market. But I guess the benefit that crypto has is that there are models that it can follow now. So, for example, FX, you can see how FX works. It's huge volume. You have global clearing. You have a lot of aggregators, so you can get prices that are super tight. And FX and crypto essentially can follow that model, right? You can see which way it's heading. Like, what kind of products will there be on crypto? Because really, from a trading perspective, I guess the way I see it is you can really think about it as just another currency pair. Like if you're from a trader, right? From your perspective, on your desk you can have euro, dollar, yen, Aussie, and you can just have Bitcoin there. Obviously, it's not probably on the same platform now that you can trade it, but on platforms you do trade it. Even Amber has an institutional grade platform. You can actually see behind me there. It looks exactly like FX. Like there's bid and offer. You can put in your size and you click on it. It's basically just another currency. So from like a pure trading perspective, if you're looking at it, yeah, they're just like a bunch of extra currency pairs. And then, obviously there's more nuance in the sense that, Bitcoin is the biggest, so it's most liquid. And then as you go down from there, liquidity gets worse. So you probably wouldn't trade it like, dollar yen, like as Bitcoin can be. But there's a lot of growth in crypto right now. Obviously, with this last run up in price, there's a lot more people talking about it. A lot more people, like friends and family asking me more about it. And yeah, it's an exciting time kind of in the space. I expect 2021 will be similar in the sense that it will just get more media attention and kind of become more legitimate, become more mainstream in a sense.
When did you get into cryptos? Was it in the very beginning of 2013 or was it more closer to now or like halfway in between?
Yeah, it was 2019 when I got into crypto. And yeah, I mean, I get in crypto terms, actually it's like a lifetime, like a year and a half in crypto. But it's interesting. So the reason I joined Amber was it was started by, 6 guys that were all, funny enough, kind of ex-fixed income traders, most of them in FX. And they were all working with me at Morgan Stanley. So I knew them all from Morgan Stanley days. Essentially, when I sat down with them, what they had built was just a great platform that is, really replicating what is missing on the crypto side, like an investment bank approach to crypto. I think there is views, there are, crypto is, very niche and it's kind of like, all like a black market stuff. And it's like, only criminals use it. And it's all the kind of businesses and operations there are, scams and fraud. So these guys built a very professional kind of platform and they're kind of thinking about everything like, like the backgrounds, what their job was at Morgan Stanley. So, and since then, we've built more and more tools. Like I said, we have Amber Pro, which is an institutional grade kind of trading platform for crypto, where you can trade Bitcoin, ETH, DOT, all the majors. So, it's been really, really interesting. And I think, the growth is still, I think we're still very early on in kind of the maturation of this market.
That's interesting. So tell me about your progression from moving to different markets to crypto. Is it like pretty much the same into trading or was it different?
I think, if I had to put a kind of number on it, I'd say the transferable skills from like, let's say an FX background into crypto, I'd like to say something around 70% of, what you've done in what traders have done in FX can kind of be replicated in crypto in the sense that from a trading perspective, right? From a trading perspective, people are looking at the same kind of charts. They're looking at the same kind of like resistance and entry points, and they're looking at where flows are, and they're looking at correlation to other markets. And ultimately, even the way you trade, like I said, if you look at, an institutional level like Bitcoin pricing, it's just, it's the bid and the offer, just like, dollar yen would be. So from that perspective, it's also similar to traders like um, I guess the different parts are maybe what happens after trade. So post trade settlement, in FX is much more automated. I guess they've had a lot of time to kind of perfect that. Where in crypto, there's still holes to fill. So there's going to be businesses that come in to do kind of global clearing and businesses that do custody that are kind of just afterthoughts in FX because it works so smoothly. So a lot of the skill set for a trader, for an FX trader looking to crypto, it can overlap. Some things where it's not yet there. I think the options market in crypto versus FX, it's there. Like there is a growing options market, but it's not nearly the same kind of level of depth that you can get in the FX markets. But I think as more and more traders come to the crypto side, as more institutions get involved, that's all going to change from there.
One thing that surprised me from the start was after signing up to like a crypto platform is the fact that some platforms don't even like you cannot hold USD in the platform. You have to transfer it to like a different crypto when you have it in your account to trade with it. And then I learned about the thing that some cryptos they make the US dollar. Is that how you proceed? Like you hold your capital in a different currency that's stable to the US dollar, or should you hold your whole trading account into cryptos or like a Bitcoin or something?
Yeah, I mean, I think that's a good observation, and I think one of the hurdles still in crypto is I guess that kind of is called fiat onboarding, right? So someone has US dollars in your bank. I think the hardest part is still getting that initial US dollars from the bank onto a platform into something you can trade. That being said, like you mentioned, so I think one of the best developments for crypto trading, from a trader's perspective, has been the emergence of all these stable coins. And there's a bunch of different ones, but essentially, in theory, the biggest ones are, you give me $1 US, we put that dollar in a vault, and we create one stable coin, right? Whether it's USDC, Circle, which is backed by kind of Coinbase, or USDT, which is Tether, that's 1-to-1, right? So that is safe. That's 1-to-1. And, of course, this is all, in theory, but I think that has been, such a huge development. So, when you trade, let's say, you have your money on an exchange and you're trading in and out of a lot of these, maybe you have, the larger tokens like Bitcoin and ETH, and then you're trading into smaller, altcoins, which have a smaller market cap, smaller trading volume. In the past, if you had to hold it in something, right? So whatever gains you had, maybe you kept it in BTC, which obviously would have been great now because we're, near all-time highs. But for a lot of people, they're not comfortable with that. And I totally understand, because you need to index that back to something kind of that you're comfortable with, that perhaps you can use back in FX, or you can buy equities with, or that you can, take out and actually pay your rent with, right? So having these stables, it's massive. So a lot of the biggest trading volume pairs are all versus these stable coins. So it also makes a lot of traders, including myself, more comfortable just leaving it in, funds in crypto, even if it's in a stable coin. Technically it's a crypto, meaning I can take that and trade into something else super quickly. I don't need to, send money somewhere, wait for someone to do something. I can have that in, a crypto wallet, send that to wherever I need, whatever exchange or whatever vendor I'm using, and trade with it, and then, bring it back to my wallet. And it's linked to USD. So, right. So you have that kind of, you can sleep at night in the sense that, if you don't want to have crazy exposure all the time, you can have it back in USD. So I think it's been a massive development for the trading market. And I think it's been great.
Now, tell me about the fees, because I know in the very beginning of cryptos, especially when the Forex brokers started to implement and offer cryptos, the fees were like really, really big, really high. Has that changed a little bit? Or what would be like some common fees that are okay to pay and some fees that are like just way too high?
That's a really great question, because even since I've joined, so like in a year and a half, margins, fees have all compressed. Obviously, as more competitors enter a space, the easiest way, I guess, is to compete on price, right? So fees, I'd say, are not bad at all. So like if you're talking about trading on our platform, and you're talking about trading Bitcoin, there's no fee apart from the bid offer. So it's just the bid offer spread, which is similar to, equities or FX. And for Bitcoin, those spreads are super tight now. Bitcoin essentially is a commodity in my view, in the sense that the Bitcoin pricing is a commodity. So if you asked 5 or 10 of the largest, let's say OTC desk for a price on 50 Bitcoin, you basically get the same price. Someone's going to be, 10 cents better here, but essentially, you're not going to be getting like arbable prices. You're probably not going to be getting someone offering or bidding at mid unless they have a strong axe. So you're going to get kind of a similar price. And those spreads are super tight. If you're trading through us on very small tokens, the fee we would charge to execute would be 1%. Or 50 basis points for some of the major coins. And there's no other hidden fees. The thing about that is if you traded that kind of on yourself on an exchange, you're still paying the exchange fee, right? So I think fees are coming in very quickly. And ultimately, people are not really going to be able to compete on just undercutting pricing anymore. There will be more on like service, support, all that kind of other stuff. So, I mean, for anyone who's concerned about trading crypto because of exorbitant fees or super wide bid offer, I don't think that's really the case anymore.
Yeah, but I think the key here is you got to have a broker that focuses on the crypto, so not a broker that has like Forex and different things, because these Forex brokers can have like pretty big fees even now. So it's pretty insane.
No, absolutely. So I mean, for us, at Amber, I feel like we're one of the leaders in this space, and I guess we've had the advantage of not having to compete against, the Morgan Stanleys of the world, because none of those guys are really in the space yet. So, we've taken our past experience at Morgan Stanley and tried to create, a similar experience on the crypto side. But yes, I certainly agree. This is a case where, you're probably using, someone specialized in crypto versus, trading FX with the same guy you do equities with, because, that's kind of pretty common now.
Tell me about these altcoins. I remember the first time I looked at the list of all the coins in an exchange, like Coinbase is being very simple. There's a ton of them. So can we trade anything, or are there some things or some filters we need to put in place to be able to pick coins that are good for trading?
I mean, that's a good question. I mean, I guess from a trader's perspective, I would say, there's a price for everything. But from like what I trade all these coins, I mean, obviously, and I like to always kind of find parallels with the traditional market just to make it easy for people to understand. So, yes, there's thousands of altcoins listed on, hundreds of exchanges around the world. How do you figure out what you trade and what is worth it, or what is worth kind of looking at? I mean, I think it's probably, the parallel I would draw is the equity market, right? So you have, pink sheets companies in, countries like, Canada, just really tiny companies that are, micro cap companies that have very little volume. And I think the alt space is similar because, I think Bitcoin, is like a macro story, right? It's similar to, it's easy to understand, this is like an alternative currency. It's a macro story. But when you get down to these perceived altcoins, these are all projects that are trying to tackle some kind of problem or, fill a solution of some sort. So there's a story behind all of them, just like, like in equities, there'll be a story behind selling stock. So, and there are fervent kind of trading communities around a lot of these tokens. So, there'll be Telegram chats with thousands of people in them, literally 24 hours a day talking about this token and what's happening and what's going on in the market and what's developments are coming out. So there's a very trading community, and there's a very deep level of people who want to trade a lot of these smaller tokens. The volatility is higher. Potentially there's more room for it to move kind of either direction. So yeah, it's kind of interesting in that sense. So you should really think about it as, I guess, would you trade equities on these tiny companies in the same way as like if you saw a project that you really felt was doing something valuable and you thought, these guys are smart guys, be able to create a product and ultimately, have a use where, thousands, if not millions of people are using whatever kind of they come out with. And that's kind of the way I think about it.
Yeah, so it's definitely a tough one. I think you could trade them, but then you might not know what's going to happen to these coins for sure.
Yeah.
So maybe like for a short-term perspective could work out, but even then you're not sure about how price will move.
It's also similar to again, like these small micro companies that are listed on exchanges, like equity exchanges, there's a lot you don't know, right? And there could be, a big word in the crypto space is like, whales, meaning someone who has a huge amount of a token per se that can actually push things around. So yeah, I mean, if you have a token that's trading, let's say 100,000 US a day volume, but the free float is only like 5%, and 5 guys control 95% of that coin. Like it's tricky to get into, right? But I guess that's kind of similar to trading on a lot of markets, but it's just something to really keep in mind on some of the really, really small holds.
Now, I know some traders who are going to trade cryptocurrencies, and then they will then like take out everything and put it to like US dollars to spend on their brand, whatever that is. Some people, they want to trade but also keep part of their profits into other like cryptocurrencies, like Bitcoin, for example. Which side do you think is best? Would you keep some money into other currencies kind of for the long term for the growth, or does this make sense, kind of a drop it thing and put everything to US dollars for now?
Yeah, I think it ultimately comes down to risk profile and kind of the personality of that trader in a sense. There's nothing really wrong with that. It's just, I think, having a view, right? So if you think medium term Bitcoin's going higher, that should be your base currency. So whenever you're not in a trade or trading, you want to be back into Bitcoin. And I think a large part of the trader base that are active in crypto and have been for a long time. So these are, what we call the OGs of the space. I think a lot of them do view it as Bitcoin as the base. So, if they do trading executions through us, ultimately they just want to get Bitcoin back. If they're selling, a smaller altcoin because they're taking profit on it, they'll just be back in Bitcoin and kind of put that back in their wallet. So ultimately, I think it comes down to view.
Mm-hmm. Yeah, I totally agree with that. Tell me about your platform, Amber. So what makes it different from other platforms, such as it could be Coinbase, and then they have a Pro or other kind of trading platforms for cryptocurrencies?
Right. Yeah. Thanks for the opportunity to explain this. Yeah. So Amber is not an exchange per se. So, we are a provider of all crypto finance. So we will be the other side. So we quote OTC prices. We do market making for projects, meaning we help provide liquidity on exchange for projects that we work with. We provide an execution service, meaning for these small alts that don't have a lot of volume. And let's say you have $1 million US to buy of a coin that trades $50,000 a day. Obviously, trying to do that quickly is going to really skew the market, and you're not going to get a good fill. We would use our execution desk, and we use traditional methods of trading to execute that. So we might do a TWAP over a month. So we do time weighted average price over a month. So we do a volume weighted, we can trade that by amount of volume, and we target that in the market. Or we just do iceberg orders. So we slowly execute that. We have, Amber does borrow and lend. We are into structured products, similar to the FX space. So, things like dual currency deposits, where you have, you start out with US dollars, you put that in a time deposit, and at expiry, if spot is a certain level, you might get Bitcoin back. And for that, you're essentially, that's selling an option. So it's like a covered call, and you're getting yields, over 50%. I think, Amber offers something for the whole segment. So we have an app that we've launched for, the retailer prosumer space. You can do everything on there. You can do the structured products, you can trade. And then we have the institutional platform, which is, I guess, a platform that, traders are more used to looking at, where you get a bit more detailed information, which can be overwhelming to I guess, some people who just want, to buy Bitcoin or sell Bitcoin. So we basically have product from, the retail level all the way up to the institutional level. And we do basically everything across the crypto finance space.
What kind of resource would you suggest for people who want to learn more about either cryptos or specific coins, where they want to learn more about what these are and how they work? Probably not books, but like maybe websites or something people can check out.
Maybe a couple of years ago, there would have been more specific places, but now I feel like the information is just so widespread. So for every project, for example, like these altcoins, or for all those projects, they all have a dedicated website. They'll have a white paper explaining what they're building. There'll be a trading community on, chat programs like Telegram. And, a lot of traditional media now is kind of covering Bitcoin a lot. So, I read Cointelegraph and CoinDesk a lot. Even all the exchanges, I'm sure every exchange will have, kind of an explainer for, what Bitcoin is and how to trade it. So I think the information out there. I think I really recommend, especially, your audience of, a lot of people who have been trading in FX. This is really a natural progression. And, in FX, we're used to implied volatilities of, 8% or 10%. For Bitcoin, it can be 150, 200%. And it's not, so for trading wise, it might not be for the faint hearted, for the kind of moves you get. But again, I guess on the flip side of that, for traders, a lot of traders obviously want volatility. They want markets where it moves, so there's an ability to make money. So yeah, I really encourage all FX traders to take a look. I think you'll find that it's very similar. It's very easy to take that step across and add more assets to the kind of universe you trade.
Yeah, that's really interesting. I definitely look forward to learn more and try it out more and see what it's about for sure. It sounds interesting. So what can people find if they want to connect with you or reach out after this interview? What can they connect with you?
They can reach out to Amber. We're at ambergroup.io. That's the main website, and from there, you can get us on Twitter. We write a lot of Medium posts, so yeah, ambergroup.io.
Awesome, sounds good. I'll definitely check it out. I'll check out the platform you mentioned, of course, and look forward to learn what you have to offer and connect with you again more in the future.
Awesome, thanks for having me on.